If you're in the market to buy a home this spring, you're going to want to pay attention. The average rate for a standard 30-year fixed mortgage climbed to 6.83% this week. So that's up about a quarter percentage point from the week before and the highest rate in 2 months. CBS News MoneyWatch correspondent Kelly O'Grady joins us now. Kelly, why are mortgage rates climbing like this? And at what point does this become way too cost prohibitive for prospective buyers?
Well, I think we already might be at that point. We've been at that point for a while. So the 30-year fixed mortgage rate, right, that is a long-term interest rate. And so what it does is it tracks the 10-year Treasury. Now, all the time we talk about the Federal Reserve's benchmark interest rate. That's more of a short-term interest rate, and it does have some impact on mortgage rates. But the 10-year Treasury is really important because on April 4th, it was at 3.99%. A week later, on April 10th, it jumped up to 4.49. That was a very rapid jump for the 10-year Treasury, and that's exactly why you saw the mortgage rate spike so dramatically. Now, in terms of it being cost prohibitive, I mean, yes, mortgage rates are one thing, but it's also just the cost of housing in general.
And availability.
And you think about someone who got a 3% mortgage during COVID, they're looking at the market saying, well, I don't want to go buy something else and trade up.
Because even when people say, oh, you can refinance later, you still have to pay all the closing costs, and I mean, you still have to get everything approved. So President Trump says his administration is now negotiating directly with China on a trade deal when it comes to all these tariffs. And CBS News has also learned the administration has discussed a working group to deal with Beijing if this falls through. How big of a deal would it be for the two sides to come together on an agreement?
It would be a very big deal. And if you think back to the 2018 sort of trade war that happened between China and the U.S., there was a big deal. And China agreed to buy billions and billions of dollars of agricultural products. So there could be some very meaningful improvements for businesses here. But, you know, we've just seen this ratcheted up so much back and forth. I think this would also be a big deal for the markets. That would bring a lot of calm for businesses that rely on China, as well as investors who are looking at, like, you know, what is happening here. But, I mean, we've also just seen this go back and forth so many times. I think investors are in kind of a, like, fool me once kind of frame of mind.
So that's investors, but let's talk about just the average person. When you think about everything holistically, in terms of steel and aluminum tariffs, and lumber could be going up, and the current housing market, and the availability of supply right now, and the mortgage rates, what is your advice to people who might be in the market now, might be in the market in the near future? How do you know when is the right time?
So right now, I think, is a good time to pause because we just mentioned the fact that the 10-year Treasury impacts mortgage rates. The 10-year Treasury is impacted by where investors think inflation is going. So all of those things that you just mentioned could likely increase prices. And so where tariffs are going, there's just such a wild card and so much uncertainty around the U.S. economy and inflation. So right now, you're seeing mortgage rates tick up. We could see them go down if a deal happens, because then in theory, those prices wouldn't increase and you would see more stability. But you mentioned the refinancing thing. If you find that house that you love and is within your budget range,
all the boxes, is
exactly,
like the unicorn,
and it's in your budget range, or maybe it does need a little bit of work, but that's still in your budget, you can always refinance. Every housing expert that I talk to says marry the house and date the rate.
Okay, Kelly O'Grady, thank you.